What's going on, family? Johnny here, the military CEO. I'm going to break down today the case study for one of my recent clients' acquisitions. I'm in Montgomery, Alabama, a 20 unit built in 97, 98, all brick, two-story complex with a total of 20 units, seller financing deal. And this one was really good deal. We're going to break down the details of this one. So the purchase price on this deal was $1.1 million, 20 units that was comprised of the complex. So we got it for $55,000 a door, and which is phenomenal. Right now, market rents are around $950. We know that because we have a complex right down the street. So we know market rent's $950. The units right now are rented for $620. It was a low income tax credit program. It was original builder for the for the apartments. So right now they're getting $620. We bought this complex for around a 9% cap rate. You can kind of go through and look at some of my other videos about the cap rates, but we ended up at a 9% cap rate. So going in, we negotiated terms where it was a 2-year note with a 1-year option at 7%, 100% financing. Where did you do that at? But yeah, 100% financing. The caveat was there was a hedge fund that was a part owner, I think roughly around 20%. So we ended up buying out a $400,000 stake in the ownership by putting in $40,000, and then the owner put in $150,000. And so with that, we bought for $190,000 their $400,000 ownership stake. So when we sell this deal, refinance into a larger portfolio loan, we're actually gonna get $80,000 back because we're a part owner in this deal by us buying them out with $40K. And so that was one of the unique things with it, with a prior existing relationship with the owner. We had bought a complex from him before the previous year. So we had a relationship. And so he was fine with him putting in deal, buying them out, doing seller financing for a couple years, and then selling. And so with this, and that's what it's all about, being creativity, becoming the bank, knowing how to get terms and buy deals and make deals happen. And so this is $1 million deal right here without doing a whole lot of work, y'all. And so with this, we bought 40 grand to the table. But the power of it is right now with the market rents, we can increase rents $150 without doing any work, any capex, any capital expenditures to upgrade the property. Just because the rents are so low right now that we can raise rents $150 over the next 3 to 6 months as leases turn over. The majority of the leases are on month-to-month leases, so we can actually step in and start implementing this in the next 90 days. But $150 times 20 is an extra $3 grand per month. Over a year, that's an extra $36,000. And guess what? That brings your new value of the property by increasing rents $150. You add an additional $514,000 worth of value. We increased the value over 50%, almost 50%. We got it for 1.1, so not quite 50%, but right at 50%. By being able to go in with this asset, just increase the rents half of what the market rent is right now. We increase the value by a whopping $500,000. So that's the thing. If you go in and you raise it to the market rent $950, we would have to go in and put about $6,000 per door, which is about $120K. So if we invested another $120K and increased rents all the way up to market rent of $950, that would put us at what? $1,028,000 in value. So adding over $1 million in value by increasing the rents $300. And then we can actually go, so 320, and by the way, we have rubs in this case as well, where we're paying for the water bill and we're paying for the trash. So that's an additional $35 a month that we could push as we renegotiate these leases, that we can add on to the new people that move in, if some people move out, or for the people that's in place. We could say, hey, if we wanted to, but we're gonna be nice. We're not gonna actually go in and do all this at the same time going through. But as people turn over, then we'll implement this value add strategy where we'll go in, we'll put $6,000, we'll update the vinyl plank flooring, we'll paint it, we'll paint the cabinets, maybe upgrade the light fixtures and do all that, we will. And then if we need appliances, we'll upgrade them at that point in time. But This is the power of real estate. Getting into a deal with 40K, buying out someone, actually buying a position in the deal and then taking on seller financing. Whereas that you can go in from day one, renegotiate month to month leases, and in 90 days, you can add $514,000 in value in 90 days. Where can you go right now and make $514,000 in 90 days? Not a lot of places. And so this is the power of real estate and being able to go in with a value add proposition, understanding the market, being in the right areas, and knowing how you can drive value. Because guess what? When you look at a valuation for an apartment building, they don't care about what your neighbor sold their house for, or what it appraised for, or what just closed down the street. They're looking at your net operating income. And so that's one of the things when you're looking at your NOI, that how can you impact your NOI? Two ways: you can reduce expenses and you can increase income. We knew that there was a lot of meat left on the bone in regards to rents. And so we can come in and be nice, just implement halfway. We don't have to go all the way to market rent in the first turnover. And so what we do, we raise it $150. And now we've added $514,000 worth of value. So now we've gone in and we can come in and actually refinance in less than 6 months and cash out the seller, because we've added 514,000. So we can go in and get a 75% LTV loan. Interest rates are going down. So now we can get a little bit higher than right now, 70%. Seeing some people doing cash outs at 65%, which is driving a lot of opportunities in the future when we see individuals that have loans that are turning over that maybe did a lot of underwriting at lower interest rates at 4%, 4.5%, or some people are underwriting. I've seen deals that they were underwriting an exit at 3.5% back at 21, 22. And so a lot of those deals are coming up in 24, 25 timeframe. And there's going to be opportunities to get some really, really good deals for cheap because people did the math wrong, or they took risks that didn't material that actually are being realized right now. Because they're underwriting, they were expecting lower interest rates. And right now we're in a higher interest rate environment. But rates are on the right trend. They're coming down. I think we'll be somewhere probably in the sixes or maybe upper fives, mid 24, late 24, which is great. But this is a great deal. Shout out to my client, Reggie Reynolds, with putting this deal together and kind of going through the process of everything that I taught him and the program and going through in the community that we go through with the numbers. And when you look at it, it's like, okay, how do we put this deal together? How do we get past this this hedge fund that's a minority owner of the deal? How do we buy them out, negotiate that deal, have countless conversations with their attorneys, with the primary majority owners' attorneys, and making the deal happen? It takes some patience, and it takes some negotiations as well too, but we got it across the table. And this is the power of it. Seller financing, 2-year term at 7%, 1-year option with a bump up to 8% if we need to go. We won't be going that far out. We bought it right. We bought it at a 9% cap rate. And we know for the market that the market is at a 7% cap rate. And so at the end of the day, going in and raising rents $150 across 20 units adds another $36,000 to the NOI. When we bought it at $620 a month, the net operating income was right at $96,000. It was bringing in roughly around $148,000 a year, and then at about 35% expenses puts us at right at $96,000. And so with that, knowing that information, that where we can come in and add value with increasing rents partially, and then also over time we can push expenses back onto the residents, whereas they pay for their own water, they pay for their own pest control, and they pay for their own trash. That now it makes this deal even more profitable. And now we're being able to get to $950 in market rent for a 2-bedroom, 1-bath, that we're able to add $1 million worth of value to this asset. Make sure you guys tap in if you're looking to get into multifamily in 2024. We'd love to have a free coaching strategy session with you to kind of break down your goals and see how we can help you, where you can start doing deals like this, because I'm a true believer, one deal can change your life. Can you go in and add $500,000 worth of value to your net worth in just 90 days by knowing these type of strategies and going in and changing and turning over a property? Or adding $1 million by being able to just go, hey, I want to raise 120,000, go get a second position debt and let somebody finance my renovations. I renovate the units. I add $1 million worth of value. I refinance it. I pay off that $120,000 loan. I pay off the owner seller finance, and now I own it, all my cash flow. And now this asset's in my portfolio, bringing in $6,000, $7,000 a month in passive income. And that's how it works, y'all. So make sure y'all like, subscribe, share this video, and then make sure you click the link below if you want a free strategy session. We would love to hear your goals and see how we can help you with REI Genius and my mentorship community. And hopefully we can make some equity happen together, y'all. Let's go.